How's it going, everybody? Jackson here with the Wealth Squad. Today we'll be talking about stocks to buy in this pullback. And it's not stocks that you'd be thinking of. It's not your Coca-Cola or Procter and Gamble. It's more risky stuff. And risky companies, risky stocks tend to outperform once the market bounces back. And I'll show you just those stocks that will bounce back harder than everything else. So what I did, went to finviz.com and clicked 4P over 40, which means generally overvalued if it was a actual company that's profitable and we're trying to get a long-term investment on. But right now we're trying to trade and buy the dip because these stocks will bounce back and they will bounce back hard. So of course it pulls up Amazon. You can see Amazon has gone from 3,300 to 21 just in this chart alone. Tesla gone from 1100 to 600 American Towers. So you'll have some reads here because they aren't very profitable. In terms of the PE ratio, it's a different metric. ServiceNow gone from 600 to 400. Airbnb gone from 180 to under 120. And of course Square gone from 140 to 80. Fortinet 340 to 80, not too big. Shopify huge from 700, split in half to 350. Atlassian, some more tech, 300 to 177 now. Illumina 350, 240, not too bad. Mercado Libre 1200, 1300 to 775. So these stocks, most of these at least, are down very much so from the top of the specific chart. And why is that? It's because these are tech companies usually, and they are not very profitable, which means investors flock to value companies during a crash. That's where the safety is at. If these companies can't provide safety during a crash, then they are dumped, they are sold, resulting in a large drop in price. So we could actually look at a couple of these. We can start with Tesla, which I already have pulled up here. But this is the year chart. You can see we are at a very low point compared to the past. At one point worth 1,200. Now we are worth just half that. So down 50% from the highs. But past 5 years, you can see just the huge shift that Tesla has created for itself, gone from the $45 to $60 range pre-split. I'm sorry, this is post-split. Now trading for almost $700, at one point worth $1,200 a share. I don't know much about the fundamentals of Tesla. I'm not an investor in Tesla. I just watch from the sidelines, and it's very interesting because a lot of money is in this stock. A lot of people are in this stock. They're depending on it to go up, and it's been killed lately, right? It's gone from 1100 to 700 so far in 2022. These are the weekly candles, right? So you have 1, 2, 3, 4, 5, 6, 7, and it's dropped over $400 a share. Definitely something to watch out for. And next, let's go to Amazon. Amazon is an interesting one. It's at its lowest point since pre-COVID. You can see this is February 2020, and of course March was the craziness. And so we are at pre-COVID levels. So it's like all this COVID nonsense never happened. It's not like millions of people flocked online to shop. No, I guess not, because Amazon is back to those levels. And Amazon is not the most profitable company because they are focused on scale. They're focused on growing sales and revenue, not so much the bottom line. And you can see that here with the dumping of the stock recently. Something to note. Then we got ServiceNow. We can check out Airbnb, Square, Shopify. Airbnb was a recent IPO, now trading at its lowest point. Also, kind of hard to travel when all your money is being lost. You don't really need to travel once you don't have the money. Once the market's doing well, you're getting a bonus at your job, then you spend money on vacation. But if layoffs are coming, Market's getting dicey. You probably don't want to spend money on vacation, thus Airbnb not doing too hot. Square. Square's another one that's just kind of in that financial sector like PayPal, where it's kind of tough. Like, why do I need you? But Square's trading at the same level it was in August 2018. Um, Even after all this crazy COVID stuff, it went from 80 to 40 to almost 300, now back to 80. Where will it go next? Who knows? But it's a very interesting point for Square right now. Something that will bounce back very strongly once the market does. And lastly, Shopify, another very interesting one. Once worth 1,700, almost 1,800 a share, now worth just less than 400. You can see today down, I'm sorry, this week down 9.6%. Or is it this day? No, honestly, it could be this day. But just looking at it, you could see how much buildup is in this stock from just getting crushed lately. That last dip that we had a little bit ago and the recovery after that, Shopify went from 500 to 700 in a matter of 2 weeks. Now we're less than that. We're prices not seen since August 2019. Where will it go next? Eventually it'll go up once the market does, but until then, who knows? That's the hard part. It could keep going down with the market, but once the market goes back up, let's say the market goes up 2% a day, Shopify's up 6%. Market was at a standstill today. So here's the day chart. Market ended barely in the positive, down 7%. Right? You can never really know. So some interesting stocks to look out for. Shopify, Square, Amazon, Tesla, all these companies are heavily hurt in this crash and will bounce back once the market does, even more than most other stocks. So be on the lookout for that. That's the video. Thank you for watching.